G'day listeners and welcome to another APS News Bulletin, keeping you up to date and well informed on the Australian property market in real time. Now guys, jumping straight in today, story number one, fixed rate mortgage cliff looms for 891,000 Australian homeowners. This guys is direct from the BuzzFeed news desk. Almost 891,000 Australian mortgage holders who locked in low fixed interest rates during the pandemic are set to roll onto variable rates that are nearly 3 times higher in the next 12 months, according to new research by Finder, Australia's most visited comparison site. A Finder survey revealed that 27% of respondents are due to come off a fixed rate in the next year, exposing them to the impact of the fastest and largest rate hiking cycle on record. Sarah Megginson, personal finance expert at Finder, said a massive change is coming for those borrowers who were very fortunate to put their rates on ice when they did. Rates have been rising persistently over the past 2 years and are 4.25% higher than they were, but this group has been insulated from the sting as they locked in their loan just before rates started to climb. The survey also found that a further 21% of mortgage holders, or around 693,000 households, have already rolled off cheap fixed rates in the past 5 years, with many struggling with sky-high repayments. After 13 interest rate rises since April 2022, the average homeowner is now paying almost $1,400 more in monthly repayments, and we expect that mortgage holders will be unable to meet their monthly obligations if rates do increase again, as it would be a huge financial shock. She urged Australians in mortgage stress to discuss hardship arrangements with their lenders, such as interest-only loans and mortgage holidays, until they can sort out their serviceability. For those overcommitted, there's also the option to rent out a spare room or downsize if they're not coping, Miss Megginson said. Look, guys, in summary, there's a huge amount of rates that are finally rolling off from the final stages of those super low fixed rate periods. I don't know if you guys remember, but back in, it was around about 2021, there was the ability for homeowners to get fixed interest rates for 4 years at 1.99%. Those ones are now going to be the big ones that are going to be coming off. And if they're coming off from 1.99 to say 6.5%, that is a huge jump from that perspective. They're literally tripling or more the interest that they have been paying for the last 4 years to now what they're about to face moving forward. So it's going to be very interesting to watch. We're literally finally coming to the back end of this in the next 6 to 12 months. I think this is fully going to, come into effect into the marketplace of people who had those fixed rates and now obviously, rolling off onto current interest rates. It's going to be very interesting to watch from that perspective. I think the amount of growth that there has been in the marketplace for most locations across Australia in that vicinity, I think most people would also be, able to look far enough ahead to know if they're going to run into that mortgage stress, and if they did need to sell and downsize or whatever from that perspective, they would be able to do it and significantly reduce their mortgage. But yeah, this is going to be a very interesting thing to watch play out as those final 4 year in particular at the 1.99s. It's going to be really interesting to watch from an owner-occupier perspective, those things roll off in the next 6 to 12 months and the effect that it does have on the market. Story number two, guys, moving on. FOMO on steroids behind Australia's housing price surge. Article by Leith Van Onselen. He's back again with the goods, guys. Leith writes, economist Warren Hogan believes that FOMO on steroids, brought about by the growing undersupply of Australian dwellings, is behind the surge in Australian home values. Hogan told the AFR that the fear of missing out of FOMO has hit fever pitch in Australia, driven by a housing shortage that is expected to hit some 300,000 dwellings over the next 18 months amid ongoing strong overseas migration and falling housing construction. Hogan says that buyers are so fearful that the housing shortage will deteriorate and that prices will rise that their parents and now grandparents are helping them out and getting into the marketplace. As a result, home values have risen well beyond what normal affordability metrics would dictate. Fear of missing out used to be this is direct quotation from Hogan to the AFR. Fear of missing out used to be a multi-month phenomenon that peaks around spring selling season, but now it's a multi-year event. That's why I call it FOMO on steroids, he told the AFR. The perception that there is a massive shortage of homes motivates people to do whatever they can to get into the housing market, no matter how ridiculously expensive homes are. People have the view that the shortage is going to last for a long time, that will mean prices will just continue to rise, and it's not just fear of prices going up by 3% in the next 3 weeks. It's the expectation that prices will go up 20% in the next 2 to 3 years. This is quotations from him. Even assuming there's a pickup in building activity, we'll still be more than a year's supply short, which means the undersupply is not a passing fad. It is here to stay for some time. Australia has never had a housing shortage like this in recent history, so this is a major market failure. The reality is that there is price tension in the housing market because rents are going up because of the shortage of rental property, which is underpinning demand from first home buyers and investors. And it's not just the bank of mum and dad, it's now also the bank of grandparents or the bank of uncles and aunties, and this is playing a much bigger role than it has ever before, helping that younger generation get into the marketplace. That wraps up what Hogan's explained there to the AFR, and Leith finishes the article by writing, the above is an excellent explanation of the current housing situation in Australia. In a normal Australian market, 13 interest rate rises from the RBA would have sent prices plummeting and would have crushed the housing market. This frenzy has also now become an intergenerational affair with the bank of mum and dad, bank of grandma, grandpa joining the fold to help keep pushing prices higher. This massive dislocation between home prices and serviceability will eventually come undone, although your guess is as good as mine as to when that happens, he finishes the article with. I think the biggest thing to note with this is, and this is why we have come back and forward quite a few times around this in terms of supply issues, about building issues, and about where the market's really heading right now. And I keep banging on about affordability. You guys would always hear me banging on about affordability. Hearing these sorts of stories and what's really happening out there, and this is Hogan and getting the data from the banking side and seeing where a lot of these deposits are sort of coming from for people's first homes, and getting out there into marketplace, first homes and first investments. We're seeing more and more people being helped by their parents and now grandparents as well get into the marketplace. This is pushing prices beyond where they ordinarily would have gone, and then you also got there's just the absolute tight supply out there right now. There's so much demand right now that anything coming to market is getting absolutely smashed, and that is why we're seeing nationwide this really strong house price growth. Obviously, it is condensed more to specific regions that are seeing the most, but it's why we're exactly as he's kind of finished here. A normal Australian market, 13 interest rate rises from the RBA would have sent prices plummeting. It's so true. Like, that's the whole reason why they put it up. They're either trying to stall the market or bring it back, and yet the market is still performing quite strongly. So, combining with the previous article we're talking about with the mortgage cliff, sort of coming as well, like the final end piece of it, it's going to be very interesting to watch this over the next 6, 12, 18 months play out. Are interest rates going to come back in that sort of time frame if the market stays this tight and this in demand? It's going to be very, very interesting to watch. But quite honestly, as investors and as you guys being active out there, and obviously us, helping a lot of people buy and whatnot as well, it is a good time to be out there in the marketplace. A housing crisis and a housing shortage is only a good thing for us as investors, because it means rising prices and rising rents if you're in the right locations that are going to outperform the averages as well. So it's only good news, guys, for us as investors from that perspective. And it's really just building the portfolio in the correct locations with this very firmly in mind as to where it is going to keep performing and outperforming from that perspective as well. But pretty interesting couple of articles there, guys, joined together to really understand what's playing out there in the marketplace and potentially to come as well. Now, guys, that is a wrap for another APS Weekly News Bulletin. I hope you took some great value. If you did, please make sure you send it on to someone else who also might enjoy the episode. If you aren't following us yet, please hit follow or subscribe on whatever your favorite listening platform is, and make sure you stay tuned for all upcoming episodes of both the APS Weekly News Bulletin and your standard Scouting Australia podcast episodes. Until next week, guys, that's another APS News Bulletin on the Scouting Australia podcast.